Hey, welcome back to POA for you. It's Leroy again, and today we are going to attempt 2022 O Levels Paper 1 Question 2, and the topic is on income and expenses. Now, if you have a friend who you think can benefit from this video, please share it with them. Free resource for everybody. In the meantime, let's go and check out what we have today. Alright, so let's look at what this question has for us. Now, Sophia runs a business, and this business does planning for parties and events. And the first part of the question is asking us what's the accounting theory when you are accounting for sale of goods or the provision of services. Now, if you are not familiar with the accounting theories, I've got a video that's about 14 minutes that will tell you a bit about that. Right, so you go to my channel, you type in theory, and it will bring up the first hit accounting theories, POA and O levels. And in there are 12 accounting theories that you should be familiarizing yourself with. Okay, and for this particular question, sale of goods, provision of service, revenue recognition comes to mind. So what is revenue recognition? And this is the answer that I prepared for you. It's the theory whereby it's saying that revenues should only be recognized when if you're selling goods, then when you have delivered the goods to a customer, or if you are selling a service, if you've rendered that service to the customer. Right? And the other condition as well is if the value of the revenues can be measured. If, for example, you are giving a service and there's no price that is determined, there's no service fee that is agreed, it's hard to recognize your revenues in that sense. Okay, so that's part A, pretty straightforward. Now part B, their revenue account is a service fee revenue account, and there are some activities here, and just bear in mind that their financial year end is 30th September. So if you look at this date, 2021, 1st of October, that's the first day of the financial year 2021. So let's look at what the first part of this question wants. Interpret the entries in the service revenue account. So this account as of 31st December 2021 on this date, right? So on this date, the particulars in this account is trade receivables, which tells you that that's the double entry. That's the other entry of that whole double entry leg in this line. And service revenue fee revenue account is credited for 34,900, which means in the double entry system you have credited service fee revenues account. Revenue accounts are debit or credit in nature. It's credit in nature, right? And so when you're crediting service fee revenue account of 34,900, you are indicating that you're recognizing more revenues, right? That at this point in time you have earned $34,900 more revenues. And in the particular trade receivables, that will tell you what the other journal entry is. And which means that the debit entry has gone to trade receivables. Trade receivables, when you debit trade receivables, that's always an indication that you have sold something on credit. Let me just do this to show you the answer. So in here, I've said that service fees of 34,900 were billed to customers on credit, resulting in trade receivables from customers and recognition of service fees revenues of the same amount. Okay, now let's look at part 2. So part 2 is saying, hey, what happened on the 30th September 2022? So let's look at what happened in the service fee revenue. It's debited for 3,600, and the corresponding account is service fee revenue received in advance, right? So when you're debiting a service fee revenue, and service fee revenue, we have said that it's credit in nature, you are reducing the balance of the service fee revenue, and you are bringing that 3,600 that you're reducing. So you're taking this balance away from the service fee revenue and bringing it to a service fee revenue received in advance account. Essentially, in layman terms, you're saying that, hey, whatever that I've received for my service fees, I can't recognize 3,600 through revenues because I've not earned it. Maybe I have not delivered that service, so I'm going to put it in my balance sheet as a liability and call it service fee revenues received in advance. Okay, so that's what's happening, and this is what I prepared as a statement for you guys. All right, so service fee revenues billed but not rendered was 3,600, and this amount is transferred from the service fee revenue account to the received in advance account. Okay, let's look at the next part of the question. Analyze the effects of not making an adjustment for the service fee revenue received in advance on this 30th September 22, which is what we just did, right? So what's the impact to the profit of the year? So if you, what we have done in here is we have brought down the service fee revenue account, right? Because here we've debited service fee revenue account and it's reduced from 86,200 to 82,600, right? So it's brought down. Now, if revenues are lower, all things being equal, what do you think profits would be, higher or lower? Okay, the answer is profits would be lower. So if you did not do the adjustment to bring down revenues and therefore bring down profits, then your profits would be overstated, would be too much, right? Would be incorrectly too much. And let us see what I've done here. So it's overstated, and I'm kind of giving you this snapshot on how you understand this. Revenues, it increases profits, right? Expenses, it reduces profits, because revenues less expense equals to profits. So in this case, if we had not reduced revenues would be too much, and therefore profits would be too much. Look at this. If I didn't take the 3,600 away, then revenues would be 86,000 instead of 82,000. That's too much, and therefore that would have the ripple effect on profits as well. Okay. What is the impact on statement of financial position? So when we did this entry here, service fee debit service service fee revenue account and credit service fee revenue received in advance, you are recognizing a liability, right? And service fee revenue is a liability, and therefore if you did not do that, then did not do the entry, then what would happen is your liability will be understated. Okay, so you just have to remember that anything that you receive in advance is a liability. The next part of the question is asking about this advertising expense account. And it's asked us to calculate what's the amount of advertising expense account that needs to be transferred to the state income summary on 30th September 2022. So if you look at this account, in the first day of September, you have a balance brought down of 7,500. So this account is starting with 7,500. As of September 1st, you said for the financial year, you have spent 7,500 on advertising expense. And then it goes on to say that, hey, cash at bank entry, there's a debit amount to this advertising expense tagged to cash at bank, which means that you've paid in cash 780 for additional advertising expense, because advertising expense is debit in nature, and you can see this balance is debit. So which means that this will add on to this as a rolling how much you spend in advertising expense total. And in the last day of September, you said that you have an advertising expense payable of 50, which means that you've incurred an additional advertising expense of 50 on credit, but you have not paid for it. And that's why it's crystallizing a payable account too. Okay, so calculate the amount of advertising expense to be transferred to the income statement. It's just an addition of all these three. Okay, so that's pretty much your answer. See what I've prepared for you. So this would be the brought down plus the debit entries less the credit entries. There's no credit entries here, so it's the summation of these three numbers. Next part E. The business also rents out their premises, part of their premises, right? And they have a bit of rental income here. And as of the end of the year, the rental income received is 9,000. But the basic assumption in this question is, whatever that you receive as is not necessarily what you have earned, right? And the question goes on to tell us that on the first day of the financial year 2021, there was no outstanding amount, but on the last day, the tenant who's renting the property from the business owes the business $500. Okay, so they've asked us to kind of show an extract of the financial statements, including service fee revenue, rental income, and advertising expense. So these 3 lines. Okay, so let's see what I prepared here. So service fee revenue is 82,600. Okay, I've extracted it from the top here, 82,600, and that's pretty straightforward. Okay, then on top of that, there's additional revenues. There's rental revenues. Now I've called it as 9,500, and I'll explain to you in a bit why. And then this total is the total revenues, service fee and rental revenues. Then there's less expenses, which is advertising, which is this amount here. Oops, this amount here, 8,330. Okay. Now remember, in a statement of financial performance, is essentially trying to tell you, the business, when you have your revenues, you have your expense, what's the residual profit, right? So this is the same thing. Revenues less expense equals to a line called profit, but we're not showing this here because this is an extract and there may be other expenses, so we don't show what the profits are, or we don't need to. Okay, so let me explain a bit of how I got this 9,005, right? So to do that, I've prepared also a rental income account, just mirroring what these statements are telling us, right? So in here, rental income received during the year was 9,000, and there was no amount outstanding in the beginning of the financial period. So the beginning of financial period, everything is clean, the balance is 0. Okay, and then in the year, I'm assuming, let's say the end of the year, the last date of the year, you receive $9,000, right? And your double entry will be debit cash in bank, because your bank account goes up, bank is debit in nature, so you would debit cash at bank when you receive money, and credit rental income because you receive it for the rental income revenue, which is credit in nature. And then your tenants owe you $500. So if your tenants owe you $500, that means you have a receivable of $500, and receivables are assets, and that's debit in nature. So you would debit rental income, receivables, and you would credit rental income account, right? So you add up these two and it gives you 9,500, which I've plugged in here. All right. So I hope you have enjoyed this video. If you have any questions, just let me know. Have a friend to recommend this video to, please do so. So good luck for now. Take care.